What's going on, guys? This is your boy Trillionaire Mac, and welcome back to another video. So in this video, we're going to be breaking down a EURJPY trade that took place last week. And not only if you were a part of the mentorship program or the Telegram community, were you able to take this trade and benefit from a 12% gain, but also for those funded traders that are a part of the mentorship program and a part of the Telegram community, you guys were able to use this trade in order to pass your funding challenge. So for those of you who are having difficulty within this down market right now, just know that with how we trade, we can make money no matter what the market is doing, which is so very important. Along with that, let's say you don't want to touch your own capital, right? That's why the Matrix Trading Mentorship Program has a specific route that we put funded traders on in order to pass those challenges so you guys can start making money as soon as possible. So within this video, we're going to be breaking it down from the higher time frame down to the lower time frame for you guys. Make sure you guys are back testing, placing these on your charts as we move forward. With that being said, sit back, relax, and let's get into it. All right, so first we're going to start on the H4 time frame as it relates to EURJPY. Now remember, this is a cross pair, okay, but because this is a currency pair, we can make money on this pair no matter if price is moving up or down. I've received a couple of questions within my DMs and within the YouTube comment section with individuals asking, hey Mac, the market is down right now as it relates to what's going on across seas. Are we still able to make money? And the answer is absolutely. Because look at it like this. When euro versus the Japanese yen goes down, that simply means we are buying the Japanese yen, right? When euro against the Japanese yen goes up, when this asset goes up, that simply means we are just buying the euro, right? So that is how trading currencies works. And you can also do that with indices, stocks, cryptocurrency, commodities, right? There's a lot of assets that you guys can trade for those overseas individuals that have been asking me that question, all right? Let's get into the breakdown. So as we can see, within this area right here, this is where I was looking to take the trade, and this is where the trade was formulated. So let's go over this. First, we're going to start out with structure. As you guys can see, we have this higher low here. Okay, we break to the upside, breaking this previous higher high, and we create a new higher high. Right after that, price then pulls to the downside, and we create a new lower low. Right, so we had a change of momentum from price pushing to the upside, now pushing to the downside. Now, our first trade idea is waiting for price to tap into one of these areas here before we looked to take a possible entry opportunity. We can see that price has also dropped a little bit of inducement here, okay? Simply just liquidity resting under this supply area here, and we can see that price pushes to the downside. Now, we know at this lower low we have some type of demand, right? We know that demand was responsible for pushing price back to the upside with this slight retracement, creating this lower high right here, which is also going to be used as inducement if price wants to travel further, right? So after demand had pushed price to the upside, instead of price tapping into this supply here, or even this supply region here, price started to roll over to the downside, right? Came back within this area to interact with this demand region here, here, and then fails it right after, okay? So let's break this down to the H2 time frame just to get a little more detail. All right, so breaking this down to the H2 time frame, what we can see take place is a failed reaction here. So breaking this down to the H2 time frame, what we can see is we have inducement here within this region. Okay, it's just simply liquidity resting above our demand region that could possibly attract price. It doesn't always have to attract price, but whenever it does, we know that that is going to be a sweep of some type of liquidity. So price pushes to the downside, we react to this demand, and then we create a failed reaction. Okay, anytime price interacts with demand, it's supposed to do something with supply. Anytime price interacts with supply, it's supposed to do something with demand. Now, I won't be going deeper into those concepts. Those concepts are safe for the mentorship program. But if you're having trouble on the charts, if you want to improve your efficiency, and if you want a 1, 2, 3-step process to hop into these trades day in and day out, the mentorship program is going to be for you. We've had so many students pass their funded accounts. We've had so many students be able to produce weekly results, monthly results, daily results, especially with day trading, right? Especially with day trading. And once you join the mentorship program, you also get to day trade with me. Yes, that is absolutely correct. Those of you who are part of the mentorship program, we day trade on a scheduled basis where you guys can take advantage of my trade setups. So let's get back to the charts. So as we can see, price creates a failed reaction here, pushes to the upside, okay? Taps into this supply that was responsible for breaking whatever demand was resting at these lows here, with this nice push to the downside, right? And then right after interacting with that supply, we then push to the downside and fail this demand completely. Okay, that's exactly what we want to see. So essentially, this region here is going to be an important region if price returns back to it and gives us a certain entry schematic, right? So let's break this down just a little bit more, go down to the lower time frames, and let's see what's going on once price taps into this region right here. So once we break this down to the M15 time frame, what we can see is price essentially sweeps this liquidity here. Okay, we have demand that comes into the market here that was responsible for this move to the upside, sweeping that liquidity, and then right after that, price falls over to the downside. We have a failed reaction of price interacting with this demand, and that failed reaction gets taken out with a nice move to the downside, which equates to a demand failure as well as our change of market structure. Okay, so here we have 2 points of interest, and we're actually going to break this down. Let's hop to the 5-minute time frame. And remember, guys, you don't necessarily have to use the lower time frames, but once you are a student of matrix trading group, I show you guys how to be effective and efficient on those lower time frames, because they're going to give you small tidbits that's going to assist you with understanding where the market is going to go. Because remember, price is all an algorithm, right? So if we're able to see what the algorithm is doing, then we can anticipate what it may do next, right? So here we have our decisional, okay? Essentially the supply that came into the market that took out our failed reaction, and we have our apex right up here. Now, whenever I'm higher time frame trading, I love to take advantage of the apex. The apex is going to be your bread and butter always. As we can see, price pulls into this region here, pulls into our apex. Let's fix this up just a little bit. There we go. Pulls into our apex. Okay, we take a trade. All right, stop loss 9.5 pips. You guys know I like to round up. Okay, I'm never going to round down with the stop loss. Always going to give a little bit of cushion. 9.5 pips. All right. Risking 1% of your account on this trade, and our target was our week low based on our higher time frame. Meaning, this was the low that was created before price gave us a retracement back into our flip here, right? Back into our supply that was responsible for pushing price to the downside and taking out this demand. So this low here is weak. Why is this low weak? Well, it's weak because it was not responsible for breaking this high, right? Now, I do have a strong high, strong lows, weak high, weak lows video. And if you haven't checked that out, you may want to go check it out. I believe we have almost 5,000 views on that video, and it really breaks down these concepts very, very well for you guys. All right, so once price returns to this area and we take an entry, then our target should be this region right here. We should be anticipating that price is going to take this out here. Now remember, our entry was here and our exit was here, yet the market continued to push to the downside. This is exactly why you want to leave small runners on your charts. Whether you leave 20% running, whether you leave 5% running, 10% running, you always want to leave a piece of your investment running just in case things like this happen. Because our main position is never going to catch the entire move. But remember, your duty is not to catch the entire move. Your job is to follow a simple set of rules over and over and over again. Taking our profit at this low here produced us around 13.86%. If you were risking 10% of your account on this trade, which I would not recommend, but let's say you were, that is a 138% return. If you were risking 1% of your account on this trade, that is a 13.86% return, which is an entire funded account challenge pass. So for those of you who need funding, for those of you who don't have your own capital, for those of you who want to increase the amount of capital that you have, feel free to join the mentorship program, become a funded trader today, and let's make money together. Join in on the live day trading, join in on the Monday night webinars, the Wednesday night webinars, the one-on-one sessions, because I have you covered. And for those of you who just want the course information in order to be able to produce these results on your own, let's say you don't need mentorship, feel free to just check out the course. Go ahead and purchase the course. And with the course comes my personal information, so you guys can be able to contact me with your course questions. With that being said, this is your boy Trillionaire Mac. I'll catch you guys on the next video. Peace out.